longs as well as calls around the bank Nifty. But we'll talk about that in just a bit. There you have it. That's exactly what I'm talking about. It's a little more writing around calls in comparison to puts. So I reckon that there will be some more challenges and hurdles with respect to the bank Nifty potentially closing about the 48,000 mark in today's day of trade, given it is expiry today. But it's something that we're going to have to wait and watch. These things can change quite quickly. So that's as far as your open interest on the bank Nifty is concerned. From there on, we move on to the stellar listing for DOMS, which lists at an over 77% premium to its issue price of around well over 780 rupees per share. And my colleague Hiral Daria spoke to Santosh Rasiklal Ravesha, who's the MD of DOMS, and of course Rahul Shah, who's the CFO of the company. This is a slice of that conversation. Listen in.
Firstly, I would really take this opportunity to welcome our new shareholders. Today, DOMS family, we were about 140,000 plus family members, including our channel partners, and we almost doubled. So welcome to our new shareholders. So as you highlighted, in terms of this primary offering that we did, we've raised about 380 crores in the company. Out of this, 280 crores will go towards capital expenditure for building up capacities. Going forward in current plant also, we are adding capacities. So overall, in the next couple of years, we'll enhance our capacities, especially towards writing instruments and increasing the capacities for our current product line.
Okay. Rahul, apart from that, if you see in terms of the gross margins as well as the PAT margins, and if I have to compare them to the industry, we're still on the lower band. What's the strategy in terms of improving at both ends, and what's the trajectory expected to look like?
We've been always talking about that. For us, there's a simple mantra that we follow, that nothing at the cost of market and at the same time nothing at the cost of margin. Our focus right now is definitely increasing our market share, growing our revenues, but at the same time ensuring that the margins, which are currently at levels of EBITDA margins at a level of 15 to 16% are maintained, and PAT margins are at about 8.5 to 9%. We would want to drive growth first. In the first half that we closed, we did about 760 crores plus of revenue. Historically, if you see, we've grown at a CAGR of about 20%. We'd like to continue that momentum for this year, and we're targeting a growth of about 25% in our top line.
Okay, so what you're saying is top line and market share is going to be of utmost importance right now, and that will be at the cost of profitability and margins, but you will not compromise, but you will not focus on it as well as of now. So if that is the situation, what is the market share right now, and where do you plan to take it to?
So our market share is close to about 12% as on FY23 in the entire stationery and art material segment in the domestic market. This is at market value. With DOMS, we believe the brand today is getting so much love and affection. The demand is very high. At the same time, we are enhancing our capacities. Plus, we get a lot of support from our partners, FILA. They are, like we always say, they are like an ocean spread across about 150 countries. So the opportunity to grow through that segment is also significantly high. So overall, we believe that it's a right place to be in, leverage our distribution network, leverage our brand, and focus on growing the market. With the product offering that we have, I'm sure we'll be able to grow at a much faster pace.
Okay, and very lastly, if you go to see in terms of valuations and the return on equity and ROCE, what's the number that you would want to maintain? Because if I look at the ROE, it's around 13.9%, ROCE around 39.3%, and from a price to earnings perspective, it is one of the most expensive amongst peers. So what's the trajectory expected to then look like?
So historically, if you see, we've always done about 3x in terms of gross asset turns. We continue to invest. In the last 3 years, we've invested about close to 175 crores. In first half of this year, we've invested about 70 crores. Considering that we would like to achieve this gross asset turn of 3x and maintain our margins between that 15 to 16% range, I think return on capital employed and return on equity would continue the same trend.
Right. And anything else that you would want to highlight, Rahul, in terms of, strategy and plans from here on?
So in terms of strategy, our growth strategy focuses on 5 aspects. One is enhancing capacities, and that is why we've done this, this major capex plan that we are onboarding on, plus in our existing infrastructure, increasing our capacities. Second is strengthening our distribution network further. Today we are at about 120,000 plus retail touch points. But wherever we've been present, we've done justice, we've created a position, and when we grow this network, we would like to do the same, leverage our relationship with FILA to maximize the growth that we can get in our export sales. And finally, look at some attractive inorganic opportunities which, complement our current product portfolio. As a brand, as a company, we would want to be present with all product categories which are associated with kids and young adults and through their growth journey. So if we find something in that segment, we'll be more than happy to look at it.
Okay, that's the management of DOMS who's telling us about all that we can expect going forward from the company. But from there on, let's shift focus and get in the experts for today. Well, we have Dhwani Patel. She is the founder of Finversify. And we also have Jay Patel. He's a research head at Investment Securities joining us on the show. Dhwani, Jay, thank you for joining in, taking us through your views here. Dhwani, I'll start off with you. Let's start off with your views on the benchmarks, actually, the Nifty and the Bank Nifty perhaps here. How are you playing them and what's your view ahead?
Good morning. What I see here on Nifty is that in the morning session, 21,500 was becoming a very crucial level because we opened up with a gap and the gap was being sustained. During this session, we have seen some sluggish move coming in. I'm definitely bullish over here on the index, but the momentum over here seems to be missing out for me. So I would just watch out for levels on the index right now. For me, 21,600 is an important level. Once we cross that on Nifty, we will be seeing some further run up coming up with momentum over here, especially Bank Nifty coming in focus today. Bank Nifty is where I am eyeing on. Bank Nifty is showing good amount of support at 48,000 levels. We are not breaching those levels. We are trying to trade tad above the same levels. So Bank Nifty from the current level is in focus and we can go long on Bank Nifty from the current levels. What I'm looking up on the higher side is 48,150 as the first target over here on the same, and the stop loss that one needs to maintain over here is of 47,900.
Okay, so going along on the Bank Nifty at the moment, of course, it is also the weekly options expiry. So a lot of those factors will also play into consideration with respect to trade. And about 150 points is not a very hard task for the Bank Nifty to assume at the moment. We do have a lot more accumulation around the 48,200 calls specifically. So I reckon that that's where we could see a little bit of a hurdle coming in. 48,150 is something that certainly looks on the cards if we do see the benchmarks maintain their strength in today's day of trade. Jay, with that I come to you. How are you viewing these benchmarks and what would you do with them?
Good morning, Agam, and good morning, everyone. So today, if we look at the Bank Nifty's chart, particularly, I believe we are seeing a short covering rally today. Also, yesterday we saw flat closing, but I guess 48,200 would be something I would say I would be bullish till then, because it's on the pivot chart we can see 40,215 as a resistance zone, and particularly currently Bank Nifty is holding above 48,000, and we can see around the put writing is happening around 82 leg position plus 48,100 as seeing 1.2 crores as a option call option writers. So particularly I would be seeing a short covering rally particularly after 2 p.m. In the today's trade. Also we can see an expiry move particularly above 40,100 zones. So we can expect the range to be around 48,200 to 48,050 in the closing today. So Bank Nifty I would be bullish on. Also on Nifty, if we look at today we saw long build up, and currently this index is trading at day's high, and particularly 21,650 would be something I would say it would be on cards in tomorrow's session. With Nifty, particularly Reliance and HDFC Bank holding out, I would say 21,650 would be something I would look at a target for tomorrow's expiry.
Okay, so definitely some amount of short covering expected as far as the Bank Nifty is concerned, which has in fact, as we speak, moved back above the mark of 48,000 in the last few minutes after showing that a little bit of volatility earlier on in the session today. Currently at 48,020 odd levels. That's as far as your Bank Nifty is concerned. But on that note, we're going to slip into a short break. But on the other side, we're going to talk about stocks and a lot more. Stay tuned to NDTV Profit. Welcome back to the F&O Show, and we now shift focus to all the ideas that our experts can offer. Well, Jay, I'll come to you. What are the stocks on your radar?
So my first stock would be some on Tata Power. Today we see a long build-up in this stock. OI changed more than 4%, and currently Tata Power price change is around 2.5%. I believe there is a flag and pole breakout, flag and pole pattern breakout on Tata Power stock, and today we saw strong momentum in this stock with volume. So particularly, I am bullish on Tata Power. With a target of 375 to 380 zones, and stop loss we can keep a very narrow stop loss at around 335. So risk reward ratio is very good in this stock, and I believe Tata Power can be a good stock for the January's future. So particularly Tata Power and energy stocks will be in momentum going on in December and January. The second stock would be on IEX, Indian Energy Exchange. So Indian Energy Exchange has seen a strong support zone at around 150 zones, and currently it is trading above that level. We can see a rounding bottom pattern forming in this stock in coming days, and we can expect the stock to rise upwards above 170 zones. So the target would be on IEX would be 175. Today we see mild long build up in this stock, and particularly if you are looking for a stop loss, I can see 145 as a good stop loss for this stock. So both are power energy related stocks, Tata Power and IEX.
Okay, and Dhwani, I believe you have one long and one short idea for us today.
Yes, absolutely. I am holding my sword on both the sides. I am having a long and a short, both the trades over here. The first idea is a long call, and we are going long on Crompton over here. The data is interesting over here as we are seeing the price action moving above all the moving averages, and we are also seeing volumes kicking in this particular counter. 306 is an ideal point in futures to get into this counter. The target over here extends from 317 to 320. Stop loss ideally over here would be 301. So 306 is your entry point, 301 is your stop loss, and for a target of 320, it can be played out very well. The second stock that I've picked up is a short call, and I am going short on Indigo over here. What I'm seeing in this counter is the options data, which is interesting, where 3000 is acting out as a good resistance on the higher side. So one can go short on Indigo from the current levels. The target over here on the downside goes to 2900. And it further extends to 2885 as well, and a stop loss over here has to be maintained at 3010.
Okay. Well, while we're at it, at the moment, I want to very quickly address one sector here, and that's the Nifty IT index. If we can quickly pull that up as well, take a look at what's really happening, because we have seen that traction come through over the past few days. Today, of course, it's also up another 1%. Dhwani, if I can address the Nifty IT index with you, what would you do with this one? And potentially, if you could offer us some levels here.
Yes, absolutely. So IT index is in momentum right now. We are seeing some halt over here coming in, where we are forming a tight range over here from 35 to 250 on the higher side at 35 980. A breakout about 36,000 over here is where we are going to see a good run up coming in on the IT pack over here. And the stocks that I'm eyeing over here, one of the stocks which I would like to share is of Birlasoft. What I'm seeing in this particular counter also is we've seen a one-side rally coming in, and in today's session also we are holding above 3% of gains over here on this counter. This one should continue further. 750 is where I'm eyeing up as a target on this one, and the stop loss over here ideally for me comes down on the lower levels, where 725 is where we have seen the breakout. So 725 hold ons very well in this counter. 750 is not far for this one.
Okay, well, on that note, going to take a moment to thank both our experts, Dhwani and Jay, for joining us and taking us through their views on the markets, as well as giving us several ideas to talk about. And with that, we wrap. But before that, Ishwar Kara of Kotak Alternative Asset Management was talking about the impact of RBI move to stop the misuse of AIFs. Listen in.
All the Cat 2 AIFs will get impacted by this, because I'm sure quite a large number of them would have sponsors who would be REs.
Right.
So whoever have got RE as their a sponsor and they're raising funds through that, they would be affected, because they have to make sure that, and the other part is that even if we were to make this investment, it says that you need to provide 100% on that. That the RE needs to provide 100% on the entire investment.
Correct.
I think there should be a clarification saying that only to the extent of the end use going towards that company, right?
Understood. Okay.
In which the RE had an exposure.
So not the
Why
entire
should all
investment.
the other investments also be provided for?
Understood.
So I think that is another clarification which would be in order to clarify this position.
The last question
But all
from my
AIF
side.
Cat 2s will get affected if they have REs. And there are a whole lot of NBFCs who have actually invested in AIFs.
Understood. Last question from my side. There's a very tight 30-day deadline that the RBI set for unwinding these investments. Who's the buyer at the other end? Is the market deep enough for these REs to exit these investments without it becoming a bit of an issue?
It will be a big challenge, Vishy, because understand that they're the sponsors. Most of them are also sponsors of the AIFs. And sponsor commitment is mandatory because of, let's say, it could range from anywhere from 5% to 25% of the corpus of the AIF.
Yeah.
And because he's putting in that money, you are able to raise the balance, whatever, 75 to 95% from other LPs. So if you pull out the capital from the sponsor in 30 days, the whole AIF will collapse, right? The fund will collapse.